This is Andre Banks coming today from Banks Credit Chat, going with a little video that's a little bit outside of the scope of this channel, but it's still something worthy to talk about when it comes to dealing with credit, debt, and real estate. And essentially it's talking about the DJNB Breakfast Club, Cesar Pina kind of scandal, for the lack of a better word. Everything still has to be brought on to court, allegedly. Again, I have to use the word allegedly because it's still an ongoing investigation. And the reason why I'm bringing this up, because several years ago, a friend of mine, close friend of mine, actually, he went to one of these seminars because he was getting ready to retire. He's actually worked 20-something years in the city of New York, and they allow you to retire early. And so he was getting ready to retire, and he wanted to get into real estate. So first they called me and asked me about what is my opinion. And this is around 2020, late 20, and before the pandemic was really taking its foot, but it was starting to take a foothold. Through 2020, and he was getting ready to retire, and roughly around the time late 2020, and he wanted to find out as much information he can about real estate, debt, that he owned his own home, and he just wanted to dive into the space. And I, of course, I recommended study. He's known I've been involved with real estate and as a practitioner, my own company, and then 2008 happened, and I had to shut down the company at that point, but still own the rental property, still operated in the space in some capacity. Before I started doing with the Money Manager National, I always operated in real estate. Now, currently, I'm a project manager for a hard money lender, but that's besides the point. It's just giving you some background of why he was talking to me, is because he knew I was operating real estate since 1999. I've been in the space for a while. Gray hairs on my beard, just shows experience. So I did not recommend him going to the seminar, but I said, if it's $100 at the time, go check it out. And he checked it out, and he came back. He said, well, add some information in there. Because, he was ignorant to the fact of real estate itself. He asked me what my opinion was. So I started watching, then the financial space became really big. Credit became really big. Everyone started doing channels like this is some kind of new experiment. And again, I'm not going to ramble too much on it. I just want to kind of give a little background and to focus on the points to learn here. First is that, and again, my condolences and everything. The victims that got caught into the situation. Anyone can get caught into a Ponzi scheme or anything, believing something when people are well known and in your face all the time and talking about how they're doing something. But something that just for people to keep in mind is that the time frame that they were doing this, if you own rental properties, it was under a rent moratorium. Even if you're in the best scenarios where I've had some tenants and working with them in that process, rent wasn't being collected. And earlier in their space, Cesar and Envy were talking about, allegedly, that, hey, we have this many doors. We have this many real estate doors, and we're going to generational wealth at that point. But with real estate, if you own rental properties, and if you have a debt instrument attached to them, they have to be serviced. And if rent is not coming in, that means you're coming out of your pocket to make that payment. Seems self-explanatory. But that was one of the kickers that wasn't stressed enough when they're talking to these individuals. Okay, and they covered this as probably in one of the Earn Your Leisure podcasts where they stated, how do you handle the rent moratorium? And they kind of brushed over this. He said, well, 60%, Envy said 60% allegedly, because again, this is 60% of my doors are not being, 50% of my doors are not being paid because the rent moratorium. Well, that means he has to cover that cost. And he's talking about all these other things he was doing. And that struck the red flag to me because, why, if you're covering that basis and telling individuals just getting real estate and there's a rent moratorium going on, and that still is pretty much in most states that was going on, and especially if you have some tenants who were getting that and waiting to see if they could get some relief from that point. People were not paying. Promoting something in that nature of rents, real estate at that point, it becomes cumbersome to say the least. And so I was telling my close friend, hey, listen, this is the moratorium. I'm affected by it. People real estate affected by it. It's not all rentals that I have that I get rental income in, but it hasn't had an impact on things. And that was one of the red flags to be careful about. Any real estate transaction, there's usually a debt instrument component, and that has to be serviced. And the larger it is, the larger that you're putting money into something that really is a longer term play. In the case of flipping, where they talked about I could give you a 30% return, that's not unheard of. I'm not saying it was probably I've done. I don't know each individual that he's promising on the same plan, the same property. But that's not a 30% return could be achieved. I'm not saying it's impossible. Or probable. It's just that a 30% return it is possible. Especially being in the space for a long period, you could do that. So I could see people who even had an inkling of financial inclination and real estate aspect believe that 30% things could be done if it's a flip in that point. Again, it goes back to the point of who is holding the loan on this. So is this being paid outright in cash, and can you flip it? And then if you can flip it, where's the room for error? There's no room for error in any of these conversations that something can go wrong. And that's a big red flag for me in any position, especially if you've not been in the space for periods of time. Any real estate transaction, anything that you're doing has a component of something not going right. And that will, even if in the best case scenarios, it will slow down the process. Being as a project manager, dealing with new construction all the time, even new construction and everything, you have crews working. Still, there's something that could go along with the project and derail it to some extent. It could find a new thing that happens there. And if he promised you something at a 30% return in exactly 5 months or 6 months, and I think this is part of the language that I was hearing through the point, and no one's talking much about the debt instruments that's attached to this. You own this many doors. How are you servicing the debt? Who is your lenders and stuff like that? These are the questions you need to ask. How much experience? When did you get started? These are some of the things just to be mindful about, because again, people have a short memory span and they will forget that this actually occurred. It's big news now, but as time goes on, they'll forget about it and will run the same plays again. There will be other people starting up real estate funds. There'll be a number of individuals there, especially at the latter time. Real estate functions in a 10 to 12 year cycle. It doesn't crash automatically. It takes time for it to crash, but it's correcting right now. And there's 1.7 trillion, I believe, in commercial debt that has to be resurfaced in the next year or two. So that's going to have an impact on the market, and it's having impact now as prices of people trying to sell homes, they have to lower their price, or it's sitting on the market longer. So it's kind of long-winded, a little past the scope of this. I do usually do this kind of content on my Information Age Financial Solutions channel that I have as well. If you want to check it out, worth your time. I've been putting a lot more focus on the credit, because credit is how we exist, and people seem to be more focused on that. But just wanted to throw that couple of 2 cents in about the big scandal, the Ponzi scheme, everything that's going on with that. Be mindful of it, because anyone could get caught in those kind of scenarios. The individuals, again, my deepest regrets for them in that process, especially when it deals with large sums of money. Hopefully everything gets worked out in itself. But anything dealing with real estate typically has a debt instrument that has to be serviced, and with interest rates becoming hard to get and hard money lenders having a hard, putting, high costs in terms of the deal, be mindful of that. Also, there's rooms of error that people need to talk about a little bit more. What's the exit strategy, and how long, if this doesn't happen, what's the recourse behind that? How have you handled it? And really, it becomes down to the investor himself, their experience, and being honest with you up front about that, instead of just taking the capital and just talking about the highlights of how this is it and you can do everything. It needs to be dumbed down, because it's very nuanced, and it really requires a lot more financial education that's being really presented this day. They make it so simple, but it's nothing simple, especially when you're dealing with real estate, legal terms, interest rates, debt, contractors, all the above. It becomes much more cumbersome, much more nuanced, and your financial education has to be at a higher level. If this video has been any value to you, please subscribe, leave some comments. Until my next video for Bank's Credit Chat, I'm out.